Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Tuesday, February 10th, and this is your New York Open Prep. Two themes stand out. Softer U.S. consumer and labor cost signals are nudging Treasury yields lower and the dollar lighter, while equity futures sit flat with outsized single-stock moves in tech and financials. Starting in the U.S., the tone is a touch cooler. Retail sales at the end of the holiday season fizzled, and the employment cost index eased to 0.7% in the fourth quarter, both pointing to a consumer and wage backdrop that's losing a bit of steam. Business inventories rose just 0.1% in November, versus 0.2% expected, and import prices were in line, all of which reinforces a softer growth pulse. Strategists also flag electricity inflation as a persistent headwind into 2026, partly tied to data center demand. Yields are down a few basis points at the front end, and ING notes the curve is steepening on supply concerns at the long end. Equity futures are flat, but dispersion is wide. S&P Global is sharply lower after weak profit and a disappointing outlook, while Datadog and Spotify jump on better earnings and guidance. Coca-Cola guides to modest growth as demand softens, echoing the retail story. In chips, TSMC posts a strong January revenue jump, and there's talk of a tariff carve-out for hyperscaler chip imports linked to U.S. investment plans, keeping semiconductor sentiment constructive. DuPont is firmer on a solid quarter and outlook. In Europe, policy continuity is the watchword. Danske Bank sees the European Central Bank holding rates steady through 2027, and the euro is getting modest support as Euro-USD trims losses on softer U.S. retail data. Political jitters in the U.K. are weighing on sterling, with Euro GBP edging higher and GBP JPY softer as the yen steadies post-election. In Scandinavia, a stronger-than-expected Norwegian inflation print is supporting the krone and challenging further Norges Bank easing. North of the border, Canada's softer data and cooler inflation have reduced the likelihood of 2026 Bank of Canada hikes. On commodities and geopolitics, U.S. oil majors are wary of Venezuela's environmental liabilities, despite pressure to reinvest, a reminder that sanctions and cleanup risks complicate any revival. Gold remains range-bound but firm above the 5,000 mark after a muted reaction to U.S. data. Turning to markets, the mix of softer U.S. growth signals and a modest front-end yield dip is supportive for risk sentiment and slightly weighs on the dollar. Semiconductors have a tailwind, while consumer staples look more defensive. Looking ahead, the near-term calendar is light, with attention turning to tomorrow's U.S. jobs data, ongoing earnings, and any headlines out of Washington as shutdown risks resurface. What you should be watching today: the euro against the U.S. dollar, with a bias to firm if U.S. data stays soft and the ECB message remains steady. The euro against the Norwegian krone, looking for a drift lower as Norwegian inflation supports the krone. The pound against the yen, watching for a downtrend if UK political noise persists and the yen holds steady. And gold, holding above 5,000, where softer yields could keep a slight bid within the range. In short, growth signals are cooling at the margin, policy is steady in Europe, and earnings are driving dispersion, a backdrop that keeps markets constructive, but selective.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.